Okay, recording this video on Saturday, the 24th of May, 2025, just gone 10:10 p.m. Chicago time. Do hope you are doing well. So it's the weekend, time for another weekend futures market recap. We'll go through 15 of largest futures markets, and I show you what I'm seeing on my charts. And finally, this week, after waiting 3 weeks, we finally top out. We almost kissed 6,000 on the E-mini, and we just moved away from it, and we're down 250 points from that little localized high. And we've got to go down, make exhaustion patterns on the way down on the E-mini, so we're going to talk about that. Also going to talk about the Forex markets, because that's been a pretty good call from the beginning of the year when we talked about rotations. Fund managers were making big moves, and I think all of those moves are starting to play out now. So we need to look at the long-term Forex charts, particularly interested in the Aussie dollar, which is unusual, British pound, and the euro. So we're going to look at those and weakness in the US dollar, and then we'll go through some of the tick bar charts for signals in the last week or so. Anyway, so here we are. We're at the E-mini daily chart, and I've been waiting for this cross. We've overshot resistance on the lowest time frame, and we're coming up for a cross on the intermediate time frame. I did say in last weekend's video, sometimes you can get the weakness and the cross follows up a little bit later. It's also possible that we'll have a little bit of a bounce back to test into this 6,000 level and then come down again. But for the time being, we've got weakness. We've been busting through low and intermediate supports on the different time frames, and so we're heading down to find those exhaustion patterns, so be wary of taking any little bounces. I don't think they'll be long-lived at all. But big picture, we're still in an uptrend on the E-mini, because down here at 5,000 we had big pro bars come in, so super high average trade size. Professionals down here buying that low. But in my mind, what we've not done is we've not flushed out the last of those sellers down here, and that's what we're going to do. We're going to come down to this region, find those exhaustion patterns, and then bounce from there. A 135-minute chart, next time frame down. Here we go. This is the type of pattern that I'm looking for. We've got Exhaustion Sell getting the move going at the very beginning of this move at 6,002. Up here we had Rambo patterns into those highs. Then we had a little bit of a weak bounce back, and then the professionals sold it down. So down here at the lows, yes, at 5,000, we did see some professionals come in. No exhaustion patterns. So that's what I'm looking for. I'm looking for an exhaustion pattern that'll be of a similar magnitude to this, between where we are and down here. In this area, we need to see some exhaustion pattern. When it comes to cycles, here we go. This is this highest time frame cycle on the 135-minute chart, which is equivalent to this intermediate time frame on the next time frame up. So this come together and we'll play that energy down. So there'll be resistance to support again down there. So that's what we're playing with at the moment. Now the energy has switched. We've had this really nice run for whatever it is, 6 weeks. On the way up, the energy is flowing to the other side. Everybody rushes to one side of the boat, and then they rush to the other side of the boat. And that's what we're going to do over the next several weeks as we complete this move on the way down. 45-minute chart. Again, there's that nice bottom being made. Blue professional bars coming at the lows. No exhaustion sell down here, and in fact all of those patterns were getting the move going, short covering rally type stuff. Now we've topped out again with exhaustion buy, bearish divergence, and we've busted through our support there on better pro-am. So we got some professional bars came in midweek, and then we busted through there. Background's in grey, so we're in a downtrend on the 45-minute chart, and we're looking for similar type exhaustion reads to that. And at the moment they're positive at 14,000, but we've got to get down to negative 40,000 here on the 45-minute chart. And in terms of cycles, yep, we had pullback to end of trend, rippling through the time frame. So we start in the lowest time frame, pullback to end of trend on the low, and then the intermediate time frame we overshoot a little bit, and now we're through supports, and this is what I was talking about, through supports on the low and the intermediate time frame. That means we're heading down. These things need to go pullback to end of trend on the way down, so all that energy is going to be moving us down. A 15-minute chart. Here we start to put on the beginnings and the ends of the week with solid vertical yellow lines. And here was the Trump news. We were not going to do tariffs so quickly, and we had that really strong move getting everybody's short covering rally going, and then we've been up and up and up, trailed the stop up with the professional activity, and professionals leg in. Yep, they were active here, taking profits. They leg, they don't do it all at once. And so now we've come through that trailing support, Whole bunch of super high average trade size. There's the backgrounds in blue as well as blue bars, so pro bars and big pro bars, and we've crashed through that support, and so we're weak. And again, on these time frames, we'll be wanting to look for end of trends and exhaustion patterns. We're sitting at support on the highest time frame here, but it's cyclical patterns. We don't have an end of trend, for example, on the lowest time frame syncing up with that at the moment. We'll get bounces, no doubt, during this move, but I'm just saying the energy is now switched to the downside. And lastly, the 13,500 tip bar chart, which is the handiest chart of all. It gives you the overnight activity as well as the day's activity, and it really shows us what the professionals are up to. And here we go. At the beginning of the week, we had two lovely signals here where we had blue professional bars at the highs. That's what the boxes are. So professional bars are in blue. The background in blue means it's a big pro bar, meaning the average trade size is super high. So pay attention, very important. And then when they're making new highs, busting to new highs, we put these blue boxes around just to draw your eye to those important inflection points, because they're telling us that the professionals are taking profits. It's not that the trend has changed as yet, but it's like just pay attention that we're likely to bust through the trailing stop and the direction of the trend changes. So we had one beginning of the week. We had a little bit of a gap down week on the Sunday open, then we came back up, and there's the professionals Monday's activity just getting short. We get another signal, and this is one of my favorite signals here. This is an exhaustion under the lip. So the lip for me is the trailing stop that we come back under, and this will correct down eventually when we get blue professional bars, but the trailing stop is miles away, and an exhaustion pattern is getting rid of all of those buyers at that point, and then we can safely go short. That was another nice signal here this week. We had a squeeze pattern. So the dark blue squares are highlighting professional activity at new highs, new lows, but squeezes are where the support and resistance lines and price come really close together. So let's just go to, there we go. This activity here is showing a squeeze, which is here at this point here. All of the support resistance lines were coming really close together. Price was really close together, and we bust out of squeezes into trending moves. And so there we go. We busted to a downtrend here. We got caught with Rambo patterns, so the amateurs leading the way, went through a little bit of consolidation at that point and then continued down again. So a couple of things. No blue professional bars at the lows down here, so they're not taking profits yet. We want to see professional bars, blue bars, and the background in blue, big pro bars coming in. We also want to see exhaustion patterns like this on the downside, so we've not seen any of that. Yep, we could easily get little rallies along the way, but the mood has changed now. So that's the 13,500 tip bar chart. We're through supports on the highest time frame. We put in a pullback to end of trend on the intermediate time frame. So there's some element of cyclical activity that's slowing us down at that point. But because we're so far through supports on the highest time frame, we probably have to make pullback to end of trend on this highest time frame. So any strength that we have where we end up with these lines coming together at plus 100 and turning over would be good areas to short. But no exhaustion patterns, no blue professional bars. So there we go. That's the story on the E-mini. So finally, after me crowing about this for 3 weeks, we get some resolution and 200 plus move to the downside. So that's good. Where this goes, I don't know, but what I'll be looking for is those exhaustion patterns on these highest time frames to show us that this move is all over. So something like this on the 135-minute chart. Now, let us talk about a little bit of a recap. At the beginning of the year, back at the end of December, I talked about the rotation. It's an important time of year where the big fund managers get all the macro asset advisors in, and they've done all their work to say, look, the next year, this is what's going to be hot and this is what's going to be not. It's clear now what they were saying back then, the macro advisors, was that US equities for the time being was overvalued, and there was good value to be had in the other developed markets and emerging markets. So European equities were a buy just on relative valuation perspective, and also some of the emerging markets. China has its own story, so I'm not sure you lump that into them advising that the funds switch towards Chinese equities, but certainly European equities, UK equities, I think Australian equities being relatively strong over that period. And I might do a video this week on the emerging markets to show you how to look at the relative strength of the different emerging markets. So what they were saying at the beginning of the year was start to rebalance your portfolios, and there are opportunities to be had. So when you start to move that capital, the Forex markets start to pick that up. And at the beginning of the year, we were seeing interesting inflection points in some of those Forex markets. So here we go. This is British pound on a daily chart. So coming into the end of the year, we had rainbow patterns down here. So the move being led by the amateurs, so it's suspect. And then at the beginning of the year, we had blue professional bars step in. And then by the end of the month, we had big pro bars come in, super high average trade size here at $1.24 on the British pound. And the pound has rocketed since then and had a really strong close on Friday. We're up at 135 and a third. So that's been the strongest Forex move of the lot, even stronger than the euro. Now we're at levels where this is starting to look really interesting for breaks into really big moves. We are playing with resistance on the highest time frame here. So on the daily chart on better sine wave, there's our cyclical support on the highest time frame, came in here, pullback to end of trend, a little bit early, but it was syncing up with that support. Then as soon as we start breaking through resistances, we're in an uptrend. That's why the bars are printed in red. We've had a little pullback to end of trend on the lowest time frame, but we're above resistance on the intermediate time frame, and we've now busted through resistance on the highest time frame. It's already been a great move since the beginning of the year from 20, what was that low down there, 122 to 135. We have the potential now to be busting out into a really big move. And so I suppose it plays into Trump's plan is that the US dollar should be weaker. That makes it a less attractive market to export to, but a more attractive place to manufacture and export from. So British pound is the strongest of the lot. Euro also doing the same thing. Let's look down at those bottoms in January, and we had big pro bars coming in here at the lows. We had a signal to go long at that point, and we're busting out. Yep, we made it to 116 and we've come off a little bit, but all we've done is just come back into that 110, 112 zone and bounced from there. So we could easily get through 116 with the next move. And then, see, I've lost my little, there we come on back. There we go. The cyclical patterns again on the euro. So on the way down, we made this big trending move, pull back to end of trend on the highest time frame. Then we put in some big cyclical patterns, resistance, support on the highest time frame, resistance, support on the highest time frame. So all of this is congestion in terms of cycles on that highest time frame, where we've gone through 1, 2, 3 big cycles. And when you come out of congestion moves like that, you move into trending moves. And again, we're getting close to busting through resistance on the highest time frame. We're above resistance on the intermediate time frame. We've got to go see pullback to end of trend, at least on that intermediate time frame. But getting up through this 14.5 level, all of a sudden we're busting up into really significant moves on these Forex markets. And then the one I like the most is Aussie dollar. So Aussie dollar at the beginning of the year, down here, wasn't doing much, Rambo patterns, and then we fussed around, and then we broke to 59. I thought the low on the futures market when this actually happened, it touched 58 something down here at the lows. But anyway, big pro bars come in here. Here's our blue boxes showing professionals down at the bottom. A lot of activity from 59.60 down here up to 65, and we played over the last couple of weeks in this little range, 63.5, 64.5, and now Friday's bar was super strong on Aussie. I was long Aussie at the beginning of the week and took profits at 63.5, and now we're up at 64.5, and then we're up another 50 pips from that. We're up at 65. And here on the daily chart, here's better sine wave, we're busting out through resistance on the intermediate time frame and the lowest time frame. We've got support to resistance all happening here. So for me, that's super important. So I've moved from international equities to Aussie equities on my long-term holdings there. I'm interested in the next entry point on the Aussie dollar, and just to see where these Forex markets play out on the longer time frame. So I think that's important. It's going to be weakness in the dollar index. We know the US bonds are having a little bit of trouble at the moment from international investors. The Chinese are backing off. I don't know about the Saudis, but because the Americans are producing more oil and gas locally. The requirement for Saudi oil, I suppose, is less. So there's less international demand for US bonds. So there's not that inflow into the markets. And then people potentially taking profits, moving chips around on the equities markets out of the US and into other developed markets, Europe, UK, and emerging markets. And so, yeah, just contributes to US dollar weakness. Now, that's nothing to do with the US dollar as a reserve currency. That is a totally different discussion. We're just talking about the relative strength and weaknesses and where the capital flows are going around the globe. It's not that the US dollar is not going to be a reserve currency just because you have weakness in the US dollar, which we've had all the way through the 80s, the 90s, the 2000s. The US dollar was relatively weak. It does not mean it's not going to be a reserve currency going forward. It's just where the capital flows are driving those Forex pairs at the moment. So daily charts, pretty interesting. And before moving on, silver on the daily chart. The tick bar chart on silver has been so confusing. It's just been backwards and forwards, and we'll get to that in a minute. When you have individual markets that it just looks like it's churning a lot and going nowhere, you're not getting clear signals, always go up a time frame. So if you go up to the 460-minute chart on silver, this is what's happened. We've got a spike down, blue professional bars, big pro bars here, and it's a U-turn. It's a spike down. They pushed it down and then bought it up because we've come back to test into that zone a little bit, and we're about to bust out above 34 on silver. Gold, not so much. Gold's had a really nice run. Silver has not done anything much in the last several months. So yeah, just bear that in mind when we look at the silver chart, because it'll be confusing on the tip bar chart, but on the 460-minute and the daily chart, it's looking interesting. Here's silver on the daily chart. That spiked down, exhaustion sell, and then we've got a bullish divergence happening at the moment. So getting above 34, getting above 36 could be really interesting on silver. Anyway, let us get to the tip bar charts and just look at some of the signals that we had in the last week. So again, vertical solid yellow lines mark the beginnings and the ends of the week. And here we go at the end of last week, blue professional bars coming at the lows. We get a signal long. We come into little squeezes here where everything comes together, and then we bust out of that into a trending move. Blue professional bars take profits at the highs here, but we've come back up to test into that 13.8 area. I could well see that keep on going on the euro. British pound has been super strong. So last week we had weakness, blue professional bars coming at the lows, and then on that little bit of weakness we didn't have blue professional bars taking profits here. They stepped in here. That's why we got signals. Big pro bars coming in here at 34, very important. We keep on going, so we got more moves through 34, through 35, almost 35 and a half up here. So I don't know if we're going to have a little bit of weakness first before coming back up, but the pound's been strong. Why have we got nothing here? Let me just refresh that. All right, while we've got the Aussie dollar refreshing, let's go to the other charts. So Japanese yen has been strong this week. We had blue professional bars initially buying the breakout and then the weakness there, so we've got the backgrounds in red, so that's good. No blue professional bars at the highs up here yet, so any little weakness or stair-step trade, it looks like the professionals have stepped in. So we're pushing up on the Japanese yen, continuing. 10 years, interesting. Yes, we sold off 3-4 weeks ago. Exhaustion buy, bearish divergence flush up here. The professionals active at the highs, super high average trade size there, and we've had a move down. And seemingly we got caught here at this level, and then we had a little bit of a clear out trade. So we break below that low and then bounce back up. So we've got traders getting short at this point. They've been wrong-footed there. Blue professional bars have stepped in. So the background's in red. So we got 10 years signaling strength. I would have liked to have seen big pro bars to mirror these background in blue on that chart there, but it is strong at the moment because we got the backgrounds in red. So let's see what happens if we get equities continue to sell off. Maybe there'll be a move into bonds and bonds will strengthen from there. What is going on? Why are my charts not showing up? Bitcoin this week continues to strengthen. A little bit of profit taking here at 8. Got up to almost 112 at the highs here. Amateur down bars, and it's bouncing from there at the moment. I mean, it's been a strong move in Bitcoin. So let's see if that 106 level holds going forward. It's very annoying. Natural gas. Now, natural gas I was keen on last week, because we saw all of these blue professional bars coming into the close on Friday. We had a little bit of strength there, but then that failed. We never got an arrow long to show, but we got confirmation of an uptrend. But then on that weakness that we have in natural gas down here, we had more exhaustion sell, more blue professional bars, more big pro bars with a background in blue, and then we took off. We got a signal and we took off from 345, 350, got up to 380, 85 and a bit. But we've had weakness from there. So technically we're in a downtrend at the moment, but let's see if we get some blue professional bars to show us that they're interested. We've got an exhaustion buy pattern at that point. But that was an okay signal earlier on. Copper was doing quite well. So nothing over the last couple of weeks. We had all of this big pro bar activity exhaustion sell at 450 a couple of weeks ago. Then we settled, and then on that weakness you can see they spiked it down and then bought everything, getting this move going, and then it's continued on. So I'm wondering if copper is going to break above $5, and they're just super aggressive getting into it there. Again, weakness in US dollars tend to strengthen things like commodities like copper. Corn, a whole bunch of blue professional bars taking profits. We've had a signal short. The background's in grey, showing we're in downtrend. So let's see if we get a continuation of the downtrend on corn. Soybeans, last week, a whole bunch of Rambo patterns of those highs, and we weakened from there, showing we're in a downtrend. No blue professional bars at the lows here, so yep, we're in a downtrend on soybeans. And then wheat, similarly, exhaustion buys, blue professional bars at the highs. We got a signal, we're in a downtrend. We have Rambo patterns, so we might bounce off those. So let's see if they get a continuation of the downtrend on wheat. And let's just go back and check these other markets. Yeah, just waiting for the data to come in on all of these. It's annoying. Yeah, so rather than wait for all this data to fill, I'm just going to leave it there. I've probably said enough in this video. Anyway, for me, the most important moves happening at the moment are these breakout moves in Forex, how far they're going to go, and then continuation of the weakness that we've now seen in equities, and where does that head to over the next week or so. Anyway, hope your trading is going well. And don't forget, we've got day off on Monday, Memorial Day, so we've got a little bit of a respite, and then we'll be back into it for the rest of the week. Trade well.